Hello everyone, today is September 1st and this is Wyckoff Market Discussion. This is an open door session, so today we have some guests. Welcome. Let us go through some of the administrative stuff first. So first of all, I just want to point your attention to two of the classes that we have started this semester, fall semester, on Monday and Tuesday. Those are Wyckoff Trading course classes. Part 1 and Part 2. Part 1 is all about the knowledge, all about the analysis, and Part 2 is all about skill building practices, drills. I teach those classes, and I've been teaching those for the last 10 years. Very exciting to start the new semester. Always, we already have a really good group of students. I'm looking forward to working with you guys. Then on Mondays, each Monday at 9 a.m. Pacific, William Reardon and myself conduct the tape reading sessions. Those are usually for more intermediate advanced students, but you could definitely check those out. You could find some free recordings of those on our YouTube channel. Each Friday, Stock Charts TV airs power charting episodes with Bruce. You could find those later on their YouTube channel and on ours. And today, as usual, for the open door class, we have a promotion. So a promotion is 20% off the current rate, $79 monthly fee. For those of you who are on the $99 schedule, don't worry, guys. As usual, during the promotional time, we move you from 99 to 79, so we will honor that rate to you as well. You don't have to do anything. Nancy will take care of that. And with that, Bruce, hi, how you doing?
I'm great. Good to be here. I'm excited for our session today.
Yeah.
I do have a
yes.
couple of very brief announcements. One is that because Roman and I did a power charting last week, I was going to take last week off, and I'm going to do that this week instead. And so power charting will be in reruns, and so take that occasional week off, which is a great relief. But bonus is I'm doing a Your Daily 5. It'll air on Friday. I believe it's at 10:30, but it goes to on demand. After that, you can watch it whenever you want. And I'm going to cover 5 Wyckoff stocks. And so that will be the schedule for this week. And then also, Technical Securities Analysts Association of San Francisco has our fall conference September 18th. It's going to be virtual for the second year because of the COVID, and we have a great lineup. It's all buttoned up. We have really good speakers. TSLA.sf.org. It is included in membership for all TSLA members. And if you're not a member, become one, because there's all kinds of cool stuff happening. And we're going to do more and more as time goes on. We just did a great session, sort of a local group session that we did that was really fun here, right here, August panel. And they have me there, but I was like the least important person there. And then coming up on September 2nd, we have a great workshop seminar coming up, which is tomorrow night. So anyway, I'll leave it at that.
All right, awesome. So check this out, guys. We have a lot of material, Bruce, today, so we'll definitely would want to keep up the pace. So let's make sure that we go through everything. But before we jump into the actual analysis and all of the, Wyckoff interpretation of the current market, for those of you who are guests today, please make sure to check out all of the free offerings that we have either on the website or on the YouTube channel. And then if you have any questions about these signups and the subscriptions, and you will have to do this to get the promotional rate before the next Wednesday's session, please email us also at wyckoffAssociates@gmail.com, and Nancy will be more than happy to answer any of your questions. All right, well, let's talk about the markets. We're going to do two things. And we kind of were thinking as Bruce and I were preparing for this session, what to show. What would we like for you to see? And we just said, we truly think that each session that we have is kind of like, has the maximum value. And so we're just going to show you exactly what we're doing today. So for the market discussion today, we're going to have some slides on the topics that are of interest to us and we think of importance to you. And then we're also going to put on the charts and we're just going to do some chart reading on that. So with that, Bruce, this is our first chart. So Nasdaq Composite and NYSE. So what do you see here?
Well, most importantly is I see the summation index on the bottom for the Nasdaq Composite, and then also for the New York Stock Exchange. We've been keeping an eye on this, and the main way that we use it is it's directional. And so if the line is declining, and this is a breadth indicator involving advanced decline analysis, is that if it's in a decline, that generally is a period of either sideways or downtrending environment for the stock market. And it has been declining up until very recently, and now it's turned up. And so the northerly direction of this indicator is a very good thing. It's directionally up for both the New York and for the Nasdaq Composite, and we will give it all the benefit of the doubt. And it suggests to me, as the market has started to take off here, Ramon, that it's going to be a constructive for higher prices. And also notice how on the NASDAQ, what I'm noticing is that you have this turn up. It's now turned up, and look at the ease with which the NASDAQ Composite is rising in conjunction with that, which I think is very constructive. And so, and also puts it at new highs.
Yeah, I'm not personally that familiar with this indicator, but I understand the value of it. So when you say that it's rising easily right here, I could see that the distance between those dots is showing some of the momentum. Like we do not have it here. This is much more laborious as the rise. And then we want to get into this type of moves where there is definitely a lot of like rallying mode. So this kind of indicates that we might have that type of move to the upside. Well, I guess my next question, Bruce, would be if this implies that we have more of ease of movement to the upside, let's say in both Composite and NYSE, what are the targets for us, right? So maybe we could jump right away to the PnFs. Do you mind?
Well, just one comment here. And that is, if you look up here at the NASDAQ Composite at the top, notice how when the line started to drop, now this is in the month of July, that it coincided with a sideways action in the NASDAQ comp. It did not drop. I think that has a lot to do with the mega caps and the fact that, and we documented here in prior weeks, how the internals of the market have really favored the mega caps and the smaller growth type stocks, which have been very dynamic here recently since, say, February, have been correcting. And so the indicator, you can see the downward slide of the summation, which is a reflection of the fact that you have a decline of the advanced decline characteristics of the market coinciding with deterioration in the individual stocks. And that has produced a sideways action in the index. Also, you can see the same thing occurring over here in the New York Composite. So now The thing with the New York Composite is not quite at a new high yet, but there's a large cause built there that goes all the way back to May. And there's also a cause built in the New York Comp going back into, let's call it the end of June. So anyway, just that's the only comment I want to leave it with before we move on.
All right. Well, let's come back to this question. If we're thinking that Nasdaq or other indices are going to go up, let's just look at the PnF right away. I think this is a really interesting jump here. Okay, Bruce. So it seems to me that you found the way to find higher objectives. So please talk to us about these two charts. Explain to us why you're taking those objectives, and then I have a couple of questions.
Sure. So this is 15-minute intraday data, 3-box reversal method using ATR scaling. And we love to do intraday point and figure. It's remarkable how useful it can be. And as you can see here with the S&P, that there's been a cause built. We're always looking for the development of a cause to precede an important move up. Now, look at the cause, which is defined by the yellow shaded area. That's our count area. We have a count line across there, which is from 44.04, and then the low, which is from 43.70. And that count area has generated an objective, two objectives. We did it as a segment. And so the larger segment you can see over there on the right, and that's all the way across, and it counts all the way. Now, this is a, call it a 4400 or 4404 count line, counts to 4867, 4908. So still substantial room to run because we're in the area of around 4,500 right now, just above 4,500. So there's a large potential in that causal structure that we can see. Smaller objective goes 4684, 4714, and we would look at that as a possible intermediate target zone on the way up. So that's pretty constructive, Roman, for higher prices ahead. And I think that's a very good looking structure for a bullish rise. And then look at how it's launched out of that area, and then notice the volume on the big catapult wall that has taken it up and out, which I think demonstrates that there's good demand.
Absolutely, yeah. So the questions that I have for you, and I would be thinking that Nasdaq has kind of like the same type of mentality structure where we're looking at the latest intraday PnF volatility, we're measuring it. It shows to us that there is so much more potential. I kind of like that, Nasdaq has the targets that are much higher relative to the targets in S&P, from the same location. Why? Because if Nasdaq is a leader, it has to travel more. So from where we are currently to the targets, it's probably going to have like a much better movement. But the question that I have for you, Bruce, so we are looking at the most recent consolidation, which we started in July, which didn't produce a lot of selling, which didn't produce a lot of damage. It was basically showing that supply has been fully in control of strong hands, and we could continue. We could expect a continuation. Would we extend the count to next two segments? Segment number, let's just label it 2, and segment 3.
Absolutely. Yes, we could definitely extend this count. I have a tendency to always err towards conservatism with the idea, this is a philosophy of mine with point and figure counting, is that the job of a point figure count is to give us a definition of a cause. And so we see this cause in the turquoise box. And it's a really, to me, is a really well-structured cause right there, Roman.
Mm-hmm.
And then we get a jump up and out on volume. And that tells me, okay, the market's in play. It's rallying on good volume. We have this, we have a tiger by the tail. Now we go out and we look at the larger count objectives and start to draw them into our structure with the idea that we have a really worthwhile minimum objective potential here in what I have highlighted. But we definitely want to extend this out to higher objectives.
Mm-hmm.
For sure. And we will do that.
Yeah, absolutely.
Yeah.
Okay. When we're gonna look at the vertical charts, guys, let's mention the area, Bruce, of where you are taking this so that there would be some kind of reference. But what this kind of gives me as an idea, because I'm not a conservative guy, I'm more of like, kind of like, give me the most out of what you have. So,
Yeah, well, and you'll all notice that Ramon wants to go right to those
yeah,
bigger
I wanna go to the bigger. And here is my
he and Hank,
yeah,
they're
I got it
they're
from
both
Hank.
like this.
Yeah, I gotta say, Hank Pruden, our beloved teacher and mentor, who passed
Miss
away
him
in
every day.
2017. You
Miss
know,
him every day.
he was bold. I mean, I remember that count when in 2010, he took PnF count on the Dow. It was 17,000, and the Dow was still between 9 and 10,000. Nobody believed him. Nobody wanted to publish that, and yet, how true it came. Throughout the
Epic.
years.
Yeah.
But my point here, Bruce, even not about being bold like Hank and making all of the big
Yep.
counts. My point here is that the market is extremely bullish, and the market is changing the stride of the uptrend, and market is accelerating. So my assumption here is that whenever we work with the PnF in this type of contextual environment, where acceleration is possible, where we see such bullish activity, then I would be taking aggressive counts. And whenever we are in a more trading range or somewhat, of kind of like lesser of a strength of a bull market, I would be thinking more conservatively. So it's not like I'm really aggressive every time. I think I want to contextualize what targets I would be looking for. What are your comments on that?
Well, I completely agree. And what I really love about the way these markets are trading is the way that the vertical lift out of this area, which really shows to me that also notice this, Ramon, on the NDX chart on the right is how the volume, especially in the down columns, is really drying up into the end of August, right? Yeah, so it's just supply is just not present, and then when it reverses and starts to go up, this really shows that absorption is complete, demand is really good, and it's just having a near vertical lift off. So that's exactly the reason to take those bigger counts, I think, is in that context.
Okay. All right. Well, now that we've talked about the possibility of this rally to continue. We've talked about the targets of where they might potentially, meet some kind of stopping action resistance. Let's talk about breadth, and let's talk about the question of, since COVID low, the breadth has been improving. It has shown the ability, to push the uptrend in a very sustainable way, and then suddenly we're seeing that there is much more exclusivity to the selection that we're doing lately, meaning that not all stocks are going up now, and you have to be more selective. And you've mentioned, those big mega cap stocks that are propelling the indices to the higher targets. As their weight in those indices is quite substantial, sometimes over 25%. for the stocks that only occupy 1% of the index. So you regularly show us, Bruce, the breadth indicator, specifically, bullish percent, specifically stocks above 250-day moving averages. So what do we see here on these two charts?
I think this is really quite amazing because, and we've looked at these charts often, but they just really tell a story. Now, very brief explanation. Nasdaq percent of stocks above their 200-day. And so this is the percent of stocks that are above their 200-day moving average, which is just a simple definition of an uptrend. So if a stock is above the 200-day, that means by our definition, it's in an uptrend. If it's below the 200-day, it's in a downtrend. And so, there's obviously some vagaries in there somewhere with plenty of stocks, but look at what's happened since February. We've been in a stealth correction. And we've talked about this often, is that if you've been in the wrong stock since February, it's been not a great experience. And so these, call them second tier or junior growth companies that are in the Nasdaq. Now, the chart on top is all Nasdaq composite stocks. The chart underneath is the Nasdaq 100. But both the Nasdaq 100 and the Nasdaq composite are capitalization weighted. So the mega massive stocks that are in those indexes, which is about 9 stocks, really are the tail that wags the dog. And so you can see here that the mega caps have been really on the move since May. I think we've done a super good job of identifying and participating in that move and seeing it coming. But now you can see here that and one of the ways to use this indicator is, again, as a directionality indicator. So right now, this indicator has become oversold. Look at the 200, 30 at the low, 35% of NASDAQ composite stocks were above their 200-day. That's a low number. And so this has been I think, a secret correction in a lot of stocks. And for traders, I think this has been a remarkably frustrating time for many traders. So now let's go over here to the right. Now the fact that it's turned up here, just to put a point on it, the fact that it's turned up to 200, I think is good in the sense that we want to see this indicator broaden out. And so if we see this indicator broaden out, and that's by definition it rising, and more stocks can get above their 200, that's going to start to add to the momentum of the upward move. What we look at the chart on the right, now this is percent of NASDAQ composite stocks above their 50-day, much more sensitive. And so this indicator also shows that since February, it's been a downward trek for this indicator, and it got all the way down below 25% of stocks above their 50-day. This has turned up, and look, it's all the way up to 50% stocks are now above their 50-day moving average. This indicator is the one that's going to indicate and pull up the indicator on the left, because the 50-day's got to go first because it's more sensitive. And we talked about it at the time that it was oversold. And so we wanted to see, we saw a test in August of the July low and the May low. And we see that it's starting to go northward bound, and it's going up at a pretty steep rate. And so we think that this is going to broaden out into the indicator on the left with time, because these stocks are making a beeline for higher prices. And this is part of what we're seeing in the way these indexes are behaving. Ramon?
Yeah, definitely. Well, thank you, Bruce, for this explanation. So I'm gonna do bullet points here, just to get more ideas, guys, to you. So Bruce has mentioned we started this decline in breadth in Nasdaq with the rotation from growth to value. So that's kind of like the origin of the causality of this downward movement right here. And we were going through the trading range. Now, please note that the latest rally has to have some kind of kickoff, right? So where, let's say, institutions are coming in and they're producing significant buying in order for the price not to continue going down. And we see it in this area right here. So this rally in breadth indicates where they were aggressively buying. Now, after that, they stop buying, or they start buying just selectively, just few of the issues. And then look what happens. We go into a trading range, we go into the consolidation, and then the breadth starts to deteriorate. So it's very interesting how you could see in breadth work the origin and the causality for the price movement. The same with 50, with stocks above 50. We see this low, we see it coincides with the low that is the low for the latest rally. A big takeoff, and then we're stopping institutional buying somewhere in this area, and then we go into the consolidation. And again, as Bruce has said, this is a really, really great, beginning of a potential rally as well.
And
Go ahead, Bruce.
finish your thought, but I just have a thought when you're done.
Okay, so the second bullet point here is that we've talked about in other WMD classes about how the rotation could be so hidden. And I'm thinking, just kind of like thinking deeply about this rotation, that the reason why there were so many mini rotations and why a lot of them were hidden this year, and you have to go kind of under the hood to see that, is because of how everything is so fast during COVID or post-COVID, and rotations happens really quickly. And when something is going down, there is still quite a lot of other themes that are going up or being accumulated. So it's really important to look under the hood. Obviously, this type of the indicators are helping us. And another thought is that we saw how on relative strength, the rotation and reaccumulation areas were much more visible. We would be seeing this type of structures on the relative strength where we have, in Wyckoff terms, some kind of stopping action, some kind of automatic rally, secondary test, and then we are going to think of it as a trading range with the minus sign of strength as an upthrust action, and then the testing maybe in potential phase C. If we apply this type of Wyckoff logic, Wyckoff labeling, then we should be seeing a move to the upside. What this would do, this type of increase in breadth, would push the market significantly high. And not only that, it could accelerate the market. And coming back to the price objectives that Bruce was taking out of this formation right here, this is the PnF chart that we've looked at, this trading range. We definitely has the potentiality, to reach those targets. Bruce?
I just want to make the point that this is the reason, these two indicators are the reason that we do relative strength work and why we're so obsessed with it. Because relative strength work of these growth stocks against their key index, which in this case is the NDX is a very tough taskmaster for relative strength analysis. And you want to be focusing on stocks that are able to show relative performance, because if you're not doing that, you're going to end up in the laggards. And there has been a lot of laggards in 2021, and especially in the growth space. So anyway, relative strength is essentially important, and that's the reason we just really emphasize it so much.
All right, let's jump to something else. We've talked about ARK, and obviously this is a very popular subject just in the financial community to talk about. And we've shown to you guys the analog from 2000 technology bust, where this type of change of behavior and then subsequent smaller reaccumulation that leads to the rally, that leads to the retest of this rally, and then everything goes down. We're still keeping an eye on this, but for today, that's not the point. For today, we want to probably entertain something else. And Bruce, just looking at how the rally unfolded here in ARK, and obviously those are all growth stocks. Would you say that the bias here, in your opinion, is more of the reaccumulation rather than a redistribution?
Yes, for sure. That's what I see, that we're in some kind of a pivot here with ARK. ARK is now we're not recommending ARK by any stretch of the imagination. What we're doing is we're using it as a surrogate for those second tier growth names, because as a portfolio manager, they are in these growth stocks, which are smaller, emerging but very dynamic companies, and they're focused on those. And these are the stocks that have been languishing since February. And so you can really see it in the performance of ARK, is that especially into May, that ARK's performance was, really lagging. Well, it's simply the case that they're in a space where all of the stocks, which we just documented in the prior chart with the percent of stocks above their moving average, have been in a decline to a level where they got down to the 25 and 35% level. Well, now all of a sudden we're starting to see higher lows. We're seeing a good rally off the May low. Then we're seeing higher lows. And what we need to see next is for the ability to be able to jump out of this current range bound state and get above the larger resistance area and start to go. And so this is just the canary in the coal mine, in my mind. And so we want to see these stocks demonstrating that they can start to go with the mega cap growth names, and that they're back in favor again. And it appears that, Ramon, I'm sure you have a lot of thoughts on this, but it appears to me that we could be completing testing here for something like that to happen. So a series of sign of strength jumps here would be very constructive.
Yeah, I mean, I think I am cautiously optimistic, just looking at the components of ARK fund and just going through the stocks themselves, because a lot of them are setting up really nice reaccumulation ranges. But I'm saying cautiously optimistic because I would need to see, as Bruce has said, confirmations in the way of the commitment to the upside. Because in 2000, this was the look. So the price went to the resistance and then just started gradually drop down. So, but even that knowledge, guys, like the history itself of how it happened before is really helpful to understand different scenarios. And that's why we're discussing a scenario of the confirmation, and that's why we're discussing a scenario of failure. So we'll just have to see this.
Well, and we've put up ARK as an analog to the 2000 market, and it was remarkable, eerily remarkable, how much they looked alike. And so we'll keep doing that. And so, yeah, it needs to prove itself. And this is what makes, I think, Wyckoff so special and unique, is that every step of the way we're looking for tests and the ability to be able to express the ability to jump and test and jump and test. And so.
Okay, and we'll look at some of the components today of ARK, throughout all of the different stocks as we go through the selection algorithm. So just want to remind our current subscribers and also the guests in this session, or somebody who's watching, listening to this recording. Usually we go through the market in each session. We start with that analysis, and then we switch to our selection analysis. It's our goal to give you two main things in the classroom, in this class, and that is our view, current view of the market, and then secondly, to give you many different looks of many different stocks that you could consider, for your own, portfolio and so on and so forth. Okay, well, let's jump to something else. Bitcoin is a very popular instrument. It's always a lively discussion on the social media that we have and among the students in our classes. So here is the current labeling that I've done, guys, for you. And for those of you who are interested in almost like daily analysis that I conduct on Bitcoin, just because Bitcoin is a beast and a Moby Dick type of instrument for me. I'm kind of was upset with Bitcoin for some time, so I took it upon myself just to make sure that I look at it every day, that I analyze it every day. I ended up analyzing it almost every hour. That's what I do right now. So I'm pretty familiar with this instrument. So what do we see here? Well, from the area where we had a distribution, please note that I'm not stretching the distribution to the left here. This still has characteristics of the reaccumulation. For those of you who are interested in more details and more in-depth analysis, you have to go back in time and just look at my analysis there. But this whole area is populated with specific selling points of interest to us. Number 1, number 2, and number 3. This should play out in some kind of way, shape, or form in the future, where as the price advances into this area between 50 and 60,000, this should be our target zone where we could expect more resistance. And that's why the scenario that I'm outlining here in the tweet from August 20th is that we, as we go up, we might have some kind of consolidation here for some time that still will resolve itself to the upside and not to the downside. So that's point number 1. The second point is that, well, obviously currently we are somewhere here. And today Ethereum had a breakout, or just, in the last couple of days, suggesting that Bitcoin might also follow the suit. Bitcoin is weaker on comparative basis than Ethereum. So I would be expecting continuation in Bitcoin. And I'm still thinking that there should be some kind of stop in action and a pause, because what this action will do is it will lure in the last weak hands that are still thinking that Bitcoin and crypto space in general is under the redistribution, and they will start giving up, capitulating their short positions or ideas, views about the downward market, and that would propel the market into the final climactic run. Another point here is just labeling itself, kind of tricky. So I'm gonna walk you through two types of labeling. The first one, we're only looking at this structure right here. So with this structure, stop in action, sell in climax, automatic rallies, secondary test, phase A. Then we go into phase B, where we have multiple tests at the resistance, at the support, so pretty standard. And then phase C is of the complex structure. And we actually called not just that we're going to have a spring, but that we're going to have a complex spring, which I thought was, quite phenomenal. Also, the character of this reaction was extremely bullish, and we said that we're going to have a point of entry out of that reaction, which we did. This was the position that was opened here. I actually had 2 positions. I still have those. This is a long-term position for me, like long-term investment. I'm not thinking of leveraging any of the trades. And by the way, for those of you in the US, it's really hard to find the, leverage on Bitcoin right now, except for the futures. But look at how we are here experiencing a sprint type scenario as a secondary test in phase B. And then the last point, the last test of this whole formation, which was supposed to be a low sprint into this area of around 28,700. thousand, I'm sorry, and it did not. So in itself, it showed strength, and that strength you can buy on the reversal bar, which we did. And then after that, minor sign of strength, overcoming the intermediate resistance, minor backing up action into the area of the supply on this bar, and then price goes up and overcomes a very important resistance, 44,000, and that creates a major sign of strength. And I believe that the price action that we most recently had, which is a consolidation through time, right? So we're consolidating not to the downside, not reacting to the downside. What we're doing is we are more consolidating through time or through consolidation of its own. That created a major backing up action. But that's not all. So Bruce, let me just jump to the next slide and just with this thought on labeling. So we only labeled this part. How about this? What if we label a much larger formation, a much larger structure? Which structure would that be? Well, that would be the structure from 2017, the top of the climactic action, and then a move to the downside, which concludes with the selling climax with the stopping action. It is much more evident on the vertical chart because the conclusion of the selling climax was followed by a very well-defined automatic rally, a change of behavior type of rally, which was followed again with some kind of deeper secondary test as a sign of weakness in phase B, upthrust action after that, and then COVID low provided us a higher low last point of support in the potential phase C. Well, if that's the case, if 2018, 19, and 20, early 20, was a part of a much larger formation, we could calculate it. And we could also assume if this is an accumulation out of which the price is going to spring out, we're going to have a major sign of strength first, which shows that the behavior has changed, and we have. And then we are going to have some kind of backing up action to that major sign of strength, which we will call a reaccumulation. So on the vertical chart, it's much harder to see this whole area as a reaccumulation right here. This is the whole area. But there are definitely historical instances where you are going to have phase B that high. It just shows you that the overall bias is to the upside. And not only that, this area right here, it shows a lot of strength. And it suggests continuation after the final test in phase C. Well, Bruce, why don't we talk about the labeling first here? I want to hear your thoughts, and then let's switch gears to the horizontal counts and let's talk about those. So what are your thoughts on Bitcoin just in general and labeling specifically?
Well, I actually am really like, and of course, I've been here discussing Bitcoin with you all through this whole structure, and really sort of the extent of my work has been to do the point and figure work, and so it's Bitcoin really lends itself to point and figure analysis, but I really love here the idea of the complex correction, complex structure, and of course, part of what makes that correction or that structure so complex is the fact that there was a spring, and then there was an attempt to rally, and then there was a last point of support, and so that really does have the effect, because the thing you'll notice here, in my mind, Ramon, is that from May to July, this whole period along here, by the way, which was somewhat associated with the decline to these growth stocks, is that that period right there occurred quite quickly. And the thing you'll notice about Bitcoin is it's super volatile and builds huge counts in short periods of time. And so now look at the from the selling climax over to the spring. Look at all the volatility in that. That's just a classic phase B kind of behavior. Selling climax, automatic rally, huge amounts of volatility, huge amounts of volatility creates point figure structure. And then look what happened there in the that last decline down into the last point of support, and how it's so dull and quiet. We talked about that. When I say we, Ramon, I mean you, and here, and that that was a massive change of character, massive change of character in the way that it was trading, and really set up a near vertical advance. And now that whole area, I think, could be counted, could be considered as causal. So,
so let's switch gears to the counts now, because my inclination was obviously just to count this area right here, because you start with the most conservative count. But then I started thinking, Bruce, again, probably along the same lines of thinking as we've discussed the PnF counts on Nasdaq, a leadership, a lot of momentum, a lot of growth potential. What is the growth potential? Well, first of all, the growth potential is everything that is in the structure in terms of the causality. And again, when you do your PnF horizontal counts, which is so unique just to Wyckoff method, it belongs to Wyckoff method. The way of horizontal counting. And Bruce, by the way, is just expert number one in the world by far. There is no one else close to him, by the way, guys. And this is not even a compliment; it's just a fact. So looking at the most conservative count right here, Bruce, look how nicely it gives us the target area where we stopped. And with Bitcoin, you can't really expect that your counts are going to be so accurate, but you can expect the target zone where approximately you're going to have that stop in action. So that conservative count worked so nicely. And then once you fulfill that, and once we're going to overcome 64,000, that's when we're going to start thinking about the next counts, right? So the next counts are going over 100,000. And we've talked about in this class and with Alessio in the Discord group that we're expecting the Bitcoin to go above 100,000. We're expecting it, we were expecting it by the end of the year. I think it might actually happen in the first quarter. So please note these targets right here. And then, Bruce, again, my thinking goes a little bit crazy here. And I call usually, this type of analysis a little bit stupid in a sense of like, you gotta be bold when you see strength. You gotta be bold when you see a lot of growth potential. So I'm taking here, Bruce, what I'm calling here a super aggressive count. And look at where it goes. I'm gonna take the maximum here, just because, again, the logic is that Bitcoin is still growing. It's still not at the fair valuation, in my opinion. And I think that we might have a very long-term oriented campaign. And when, by the way, people look at this target, their comment is, well, how could we get there from, let's say, 50,000? Well, campaign takes time. It takes years to get there. It could take, 2, 3, 4, 5 years. I don't know. We do not have an element of time of when those targets should be reached. But it's out there. It's out there, and we could, potentially start thinking about discounts once we overcome discounts. But Bruce, and by the way, confirming reaccumulation count to this minimum count right here. So Bruce, I'm not going to bother you with the question about the super aggressive counts. Those are like way, way, way on the horizon, and I don't want to confuse our guests here. But talk to me about the aggressive count and how relevant they are right now. Would you be using them, and when would you be seeking the confirmation, on how to use them, in the near future?
this structure has a real family resemblance to the very large picture in gold.
Yes.
Now, gold is a much bigger reaccumulation, so it had a gigantic buying climax. then built this huge cause. So Bitcoin has that, but again, Bitcoin is a faster moving object. And so it moves faster, it builds count. Now, I want to just make a really big point here. We've really done a lot to innovate percentage scale point figure analysis. And we have a wonderful collaborator with Alessio. And Alessio is going to speak at the fall conference on September 18th on crypto. And so I want to just make the point here that what you all are seeing on this chart is every single time a new X is put on top of a prior X in a rising column, that's a 10% advance. 10% advance. I mean, that is just a stunning thing. And Rahman, when you look at the ability of a point and figure chart to generate that big cost from 2017 to 2020 with a 10%, it takes a 10% turn to go from an up column to a down column. This is a remarkable amount of volatility. And so, and point and figure is able to count this with this instrument. Now, this aggressive count makes all the sense in the world because it basically goes, we always start on the right and work our way to the left when we're doing counting. So it's the blue shaded box there. So you can see that after a sharp decline into a last point of support in phase C, that there's an attempt to rally off the bottom, and it rallies up, and then it has two reactions right there. Yes, those two reactions set up a backup type analysis or circumstance. Then notice the symmetry that exists, because if you go all the way over to 2018, the very important low that was set on the selling climax was exactly at the same box where the last point of support and test took place, so there's symmetry in the point figure chart on that, and then that is the actual area where you count. These markets have memory. And so here's a very important count structure. Every one of those columns across there represents a 10% advance upward. This is a logarithmic scale chart. It's a compounding exercise. When you calculate it, it's compounding that you're calculating. And so in this particular case, from a count line of 6,200, you're getting a minimum objective of 131,687 and a maximum count objective, which is double that, nearly double that, 256,620. So, and that's just the aggressive count. That's not the super aggressive count. And so, in my mind, I just had developed trust that these point and figure counts are based on the campaigning of these large composite operator institutional type interests that are operating in Bitcoin, and that this point figure chart is telling us this is where it's going. And so now the other thing that you point out, Roman, is that you have a reaccumulation count of the reaccumulation up there in purple that counts to the minimum objective of the super aggressive count. And I'm guessing, Roman, that this area just to phase B is a segment, yes, is going to confirm that count.
I should have done this. You know, I was looking at this, and I'm already seeing where you're going to go with this. I'm like, I should have done that.
I'm so jealous that you did this and I didn't.
What? What? You've done so many.
No, it's beautiful work. It's just beautiful work.
Well, you know, it's only because,
folks, this is the first time I've seen this chart, by the way.
Yeah.
I mean, we talked about doing these counts, but Roman has built a beautiful chart, and they use 10% scaling floors me,
Well,
because it's
and the reason why
really
I
big.
did this, Bruce, and usually you do this stuff for us, is because of the Bitcoin. So if it would be
Yeah,
something else, I
right.
would just
Yeah,
be
better
asking
that
you
you
to
did
do.
it. Yeah. So I'm stunned. I'm thrilled with this.
Mm-hmm. Okay, well, let's
I'm
jump
thrilled
to.
with how it turned out. Let me just put it that way.
Mm-hmm. Yeah, for
Whether or
those of
not it
you,
can get to 1,000,004,
yeah,
I have this one thought, because I know
mhm,
we're running way late.
yeah,
Is this one thought is that the Fed is, in my mind, has gone off the rails. You know, they are creating super liquidity in the system, as are other central banks. The Fed is not the only one to be doing this. And so they have put latent liquidity out into the world that is going to be very difficult to reel it back in. And it's latent out there, and it's going to find a home. And it's going to find a home in these speculative assets. And I don't think this is over yet, because they basically just came out and jawboned the other day at the Jackson Hole virtual conference that they're going to maybe look at tapering at the end of the year, which is jawboning. That's all it is. It's just talk. And until the Fed's actually doing things that reflect their concern about inflation and so on, and we've had a number of philosophical discussions on inflation here, and about how hard it is for the Fed to get ahead of inflation once it starts. But one of the places you could see the manifestations of inflation would be in crypto and in Bitcoin. I'll leave it at that for now. We'll come back to it later.
mm-hmm.
On
And
another day.
maybe in the next classes, I mean, we could invite Alessio also, for this type of the discussion. But
Sure.
there are so many future usages for cryptos just in general. And where we're going with the whole internet thing into the metaverse, which is basically so much bigger than the internet itself. I mean, it kind of suggests and support the idea that the Bitcoin and specific cryptos could be so fundamental to that infrastructure, future infrastructure. So therefore, all of the companies will have to become crypto companies effectively. Okay, let's switch gears, Bruce, and we are at 4 o'clock, so we have 30 minutes left. So let's talk about the selection. I mean, like, it's great to know what the market is doing, and hopefully, guys, we gave you, a pretty good idea at what we are looking, how we interpret the markets. So why don't we just jump into the selection, and we'll show you exactly how we do that. Let me actually back up a little bit. No, Bruce, we forgot to do one thing. Should we go through this? Probably not. Yeah, let's just go through the selection. I
Let's
think
go
we
through a
spent enough.
couple of them. just to show what we do,
What we do.
because
Okay.
we'll go through these
All right.
markets.
Mm-hmm.
We will spend more time on these markets than we will today, but basically we will go through these essential indexes like the S&P 500, Nasdaq 100, Russell, which is very interesting right now. I think the Russell and the Dow are fascinating for a couple of different reasons here, Roman. And maybe we could, so for instance, in the Russell, walk us through what you're seeing here, Roman, just really super
Well,
brief.
first of all, look at this rally, right? So I think that this is a side note as a teacher. I think the very high level of knowledge is always in the simplicity. So we're just going to give you guys bullet points here, and also we're running out of time a little bit. Look at the strength of the rally. What does it suggest? Still bullish environment. Okay, so if this is bullish, then we shouldn't really have a trading range which is going to be threatening to the structure of the uptrend or just the bullish bias. So what kind of damage do we have here? On the change of behavior, reaction. We don't see a deep retracement. We don't even retrace below the previous support before the final climactic run and into this particular bar, which was a very, very strong bar. So again, bullish. Then as we go through the trading range, we definitely see increase of the volatility in phase A, early phase B, which is very normal for the trading range. This is the area where there is a lot of profit taken and exchange of shares between institutions. Then we go into phase B, which is associated with kind of either a lackluster behavior or extremely violent behavior. So in this case, we're seeing that yes, there is some selling, but it's not that strong. And with all of the selling that is being produced in phase B, we cannot produce a very substantial downward result. Still bullish. And then with that, into the end of phase B, where we're seeing deterioration of the demand, we see this in the volume signature, we also see this in the spread and in the failure to overcome the high. That is very suggestive of the reaction. But this in itself still shows that the long-term background is bullish and the short-term background with an expectation of the reaction. So how does this reaction unfold? Well, we do have a slight increase in the volatility, let's say over this period of time in phase B, but yet look at the price spread to the downside. It's not as aggressive as the down spread that we've seen in phase A. That's number one. Secondly, in terms of the result, we still have a slightly higher low, which is being followed by another higher low test, and a much smaller reaction to the downside in terms of the distance, more diminishing supply characteristics, and also the average downward spread is diminishing as well. Not only that, every time in both cases, the takeoff has a lot of momentum signature, and we were waiting for this bar. We were talking about this, that we need to have some kind of very valid breakout, and our expectation was that that breakout is going to come, and after that we are in the testing zone, holding really nicely in the upper part of this breakout bar. And we said multiple times, weeks and actually a couple of months ago even here, that we're going to have the rally that is not only going to come to the resistance, it's going to overcome it and overcome the resistance cluster that was created in phases A and B, with the idea that this is going to be a sign of strength followed by a backing up action and then a continuation. And I do believe, Bruce, that the S&P and specifically even Nasdaq, with all of the strength that they have, with the idea of the higher targets, with the idea of the momentum coming into the market, into the leadership, that leadership momentum is going to carry Russell to new highs. And at some point, I expect that Russell at some point from a lagging instrument will turn into a leading instrument, where Nasdaq might see some profit taken, the small caps might actually enjoy some influx of money. Bruce?
I'll just say that a cause will form prior to an advance. This is a large cause.
Yes.
And so that is really a impressively large trading range that goes all the way back to February. And note that the correction in the Russell is really much more benign than the correction was when we looked at the Nasdaq composite stocks, the majority of them which were masked by the mega cap names. But there was, I think, much more price damage in the Nasdaq composite names underneath the mega caps than there was here in the Russell. So anyway, so this is the kind of analysis that we do on these different indexes. The only thing that I would add here, Ramon, is in the case of the Dow, what really strikes me about the Dow is it's become, it's up here, it's trying to, and is likely to make a new high in the near future, but You know what this really smacks of to me, the way
Mm-hmm.
that the Dow is kind of lagging? It really reminds me of 1998, 99.
Mm-hmm.
And the way that the in those days, those growth stocks, the dot-coms and so on,
I think this
really,
is a wonderful comment, Bruce. You know why? Because in that period of time, and I remember, I was a student at Golden Gate University where you and Hank were teaching Wyckoff methodology to us. Uh, in that period of time, that was a speculative period of time. And I believe that right
yes,
now we are kind of entering the same type of speculative mode. So it makes a lot
exactly.
of sense that the Dow
Yes.
is underperforming.
And the speculation isn't going to occur in the Dow stocks. I mean, yeah, they'll go up and they'll act fine and do
Mhm.
good things, but they're not going to be where the speculation is going to be. So,
Okay. Steve is asking, could you discuss really quickly gold? So really quickly, not going to spend here time, just going to give you one bullet point here. Trading range. That's it. And if you would like to see more on gold, you could actually go to our YouTube video and check out the analysis that they did yesterday and on Monday, and gold was discussed there. Bruce, I'm just trying to kind of
good one.
speed up a little bit.
Yeah, yeah. Let's keep
Mhm.
going. Yeah.
Yeah, let's keep
But
going.
that's
Let's
what
keep
we do.
going.
We usually spend much more time on this
Mhm.
page, but
Yeah. Okay, guys. Now let's talk about the selection. So what would we do with the selection? Not only we're showing you usually during the classes um, the stocks that we are selecting based on, let's say, our algorithm, Wyckoff algorithm, but we also show you how to get there in terms of how to get to let's say, to the place and how to actually conduct your selection. We usually use stock charts for the selection. First of all, stock charts is a wonderful software for swing traders and long-term investors. Bruce and I, we have such strong ties with stock charts. Bruce regularly appears on a lot of content work for stock charts, and it's a very handy tool to do your weekly selection. So on the charts and tool page, which this is, go under summary pages and find, let's say, either sector summary or industry summary. Uh, and start looking on the weekly basis, let's say, at all of the sectors first. And you can do this in a different way. We've shown you a candle glance view. We've shown you this type of view. I usually would go and would say, like, okay, in the last week or so, I want to see what has outperformed. So you could start selecting the sector for outperformance just based on the visualization of the gains or numerical visualization of the gains, or you could even think about the scooters, which is the proprietary ranking that stock charts has that was created by John Murphy, one of the grandfathers of modern technical analysis. There are multiple ways of how you can do this. Today, which is going to be very simplistic, and I would say, Bruce, real estate definitely was attracting our attention for quite some time, and today it just had a really good day. Why don't we look at this? And right away, hovering over the symbol, you could see really quickly a snapshot of the chart. It looks attractive to me. Why? Because I see that there is a very well-established uptrend. There is a pause, a reaccumulation pause, starting from June, and now we're breaking out. So I most definitely want to look at the group and at the components of, I'm sorry, not at the group, at the sector and components of that sector. You could do this two ways. You could just click on the chart, and here it is. And Bruce, what is your first impression for the chart of this sector?
well, that there's a substantial cause that's been built, and that cause, yes, right there where Ramon drew it. And really, to me, the important part of that cause really goes back from March 2021 back to June 2020. And so that looks to me like a reaccumulation that has built a potential for an important advance. And then the other thing that you can see here is there's a big base in the relative strength.
Mm-hmm.
And so I really like to look for bases. I'm doing a lot of point and figure work on relative strength. And so I'm actually working on a blog I hope to get out in the next little bit on doing a point and figure on relative strength analysis, which is very cool. But you can see that, and typically real estate doesn't tend to be a top performer, not because it's not good, but it just tends to not perform as dynamically as other sectors do because it has a high yield, 2.8% yield here. But in this case, it is outperforming. And you can see that the relative strength line is above its moving average. And that is after it built a base from, say, April of 2021 back to October of 2020. And that base is beautiful. It's in an uptrend. It's just now, since June, been sort of in a reaccumulation in the relative strength, maybe a reaccumulation in price with a slight upward tilt to it. But now all of a sudden, look what it's doing. It's just getting back in gear and starting to really mark up again, which tells me, Ramon, that that period from June to August was preparation for a new advance.
Well, now that we looked at this sector, what's the next step in the process, in the top-down approach? Well, it's so well built into the stock charts algorithms here. So you just press on the real estate sector fund, okay? And here are all of the groups under the stock charts classification that they have that belong to a real estate sector. And again, you could sort those by scooter ranking, by the percent change, or whatever else they have here. The same way you could just look at the chart, and right away you could see that this is a very well established uptrend. So it's going to be very hard to find, the candidates that are not running away from us. You could go to the group chart as well. It looks much better, much stronger than the sector itself. Or you could go right away into stocks, which we will do here. So usually both of us go right away to the cap size. It's very important for us to identify the large cap stocks and look at those. Why? Because those are going to be institutional darlings as they need liquidity to get in and out of the positions. So start there. And Bruce, why don't we just look at some of them and see if we could find something? This looks very extended. Again, extended, but there might be something there that we could find. So let me just quickly just go through them. And then why don't we just go to Essex Properties Trust? I would say that even though, Bruce, this is already in the well-established uptrend, but if we would look maybe at a longer-term structure, which we also usually advise you to do, you have to understand what's the context of where we are structurally right now. Bruce, I would say that it still looks healthy to me.
Oh, it looks, yeah. And also, I tend to think in terms of the causes that are built, like with point and figure. You can see here from January of 2021 back to the COVID low, that is a large accumulation structure. And that accumulation structure, we don't have time to count it today, but you count that and it gives you a cause. Now, all that's happened after it jumped up and out is that, like in March, late February, March, it backed up and had a very shallow backup and paused there, and then it rallied from 260 up to the old highs, jumped up, and now it's backing up. And what I would want to know is, what is the cause here in this structure? Because if it's large, let's say that the cause, now I'm just picking numbers out of thin air, but let's say that the cause is carries up to in the area of 500 on this REIT. If the cause carries up to the area of 500 and it's at 336 right now, then there's still a lot of room for higher prices, and all it's done is just go up and back up and test its upward channel. And now what we're going to do is we have to trade this as though it's in a confirmed uptrend, and we trade it accordingly and look at the reactions. Look at the March reaction, look at the May reaction, look at the August reaction. Those all become potential places to initiate or add to positions. And these are the kinds of stocks that become great trading stocks if you learn the skills of how to trade an uptrend. And so that to me is what's really stands out. Big cause in the base, nice uptrending channel, trade the channel.
Okay, let's come back. Let's look at maybe another group here in real estate, and then let's move on. So for instance, specialty REITs. Again, you can look at the chart. What I like about this chart is that, first of all, it's in the sector that is outperforming. Secondly, that it's one of the best groups in that sector. And thirdly, right away, we Wyckoffans would like to look at the structure. So we had a big accumulation or reaccumulation right here. The rally that shows a change of behavior, a sign of strength, and then a potential reaccumulation with the reversal. So it fits our bill. So let's just go here. Again, sort everything by the cap size. And then again, I want to quickly look what's attractive just on the snapshot chart. Iron Mountain looks great, but let me just quickly look at everything else, and we'll just go maybe like in the group that is strong, there will be some laggards. So this is a laggard, and I would love to look at this because there is such a big structure. So Bruce, to me, this is still a potential candidate because of the group strength and because of the sector strength. And now when I'm looking at the trading range, I understand a couple of things here. Causality has been built as a potential reaccumulation. There were attempts to go down. All of them are fading out. Supply was increasing, and then it started to decrease. So selling has decreased. And now we are, after the spring situation here, trying to reverse. And today was a really good day where effort is increasing significantly, and that produces significant result on the background of the gap and an attempt to overcome intermediate resistance. Would you be considering this type of more lagging stocks in the leading groups?
Well, and we talk a lot about reaccumulations, and during reaccumulation, you will get a stock that will go from leadership to laggard, and it'll be a laggard, and that discourages traders. They go find another playground to play in, and so they go away. And the process of them going away is the CEO building their position up. They're just buying more and more stock. Beautiful spring came at the end in August. That spring was followed by a test, and that was the cathartic moment when it went from where it was able to demonstrate that it didn't want to go down, and look at the ease with which it's moving up. And so now it's absolutely in a position where it could go very quickly from a laggard to leadership.
Okay, let's look at something else. Let's go to another sector. Okay, communication. So again, right away, I want to look at the chart. Actually, let's look at something that is not necessarily leading. Okay, consumer staples, interesting. Utilities, also very interesting. Consumer discretionary sector, Bruce. I mean, like, look at the structure here. Multiple attempts to go down, now, attempts to recover. Why don't we look at this really quick?
Yeah, go ahead.
Okay, so here, there are quite a lot of groups here. So you just want, again, to quickly go and to figure out which groups were in some kind of, reaction or a trading range. So ties looks very interesting. We'll definitely come back to this. Broadline retailers. Wow, what a beautiful chart, but mostly going to be associated with Amazon. So we might even skip this. Automobiles, obviously Tesla there is going to be dominating the chart, but look at that reaccumulation. Bruce, to me, all three right away is of interest. Specialized consumer services also has a structure there. Gambling, we've talked about this in the last session, I believe, or in the report. Why don't we look at a couple of them? So let's start with this one, special consumer services. What do we have here? Okay, not this one. Okay, let's look at it too. Bruce, what is your view of this stock? And please note, guys, how quickly we are finding these candidates, right? So this whole top-down approach, especially when you use a tool like stock charts, is extremely valuable, extremely effective. And when you know what you're looking for, you literally can find it, like in seconds. So Bruce, how would you interpret this price structure?
Well, let's go to the high points. First of all, this is a reaccumulation type structure followed by a very important uptrend. So it goes from at the lows there back in 2020, 30 bucks, goes up to 250. And so that's really a dynamic uptrend. My view is that an uptrend is going to be followed by another good uptrend. And so interspersed by reaccumulation. Now, there's a something that looks like distribution that occurred in early 2021 and had a May decline with a climactic drop with a gap on very high volume, which was obviously a combination of selling with some buying interspersed in that. And it's just been making a series of higher lows systematically ever since. And so it just has, to me, that has the look of perpetual and persistent accumulation by large interests. And it's probably a very difficult stock to buy. And I have the sense, Ramon, that the way this is trading, that it's going to all of a sudden come to life and start to accelerate its trajectory.
Yeah, have something like this going into the resistance where, this becomes a kind of like a value look for institutions, because a lot of stocks are already getting out of their formations. And that's another confirmation, Bruce, to me that, we look at a lot of stocks, we look at a lot of groups. We had a session just recently where we looked at the ETFs based on the group analysis. And oh my gosh, there are so many groups, there are so many stocks that have created those reaccumulation causalities, and the price is going up. The price is trying to break out. Some of them are already broken out. So I think we're going to have a really, really good market ahead of us into the end of this year and probably into the first quarter or two of the next year. Okay, let's look at something else. What else here? Okay. Let's look at, that was an interesting stock, eBay. We were discussing it, and I wouldn't say that, it's still that far away. We kind of have, different structures right here, and the price is still very close. So like some stepping stone type of price action. But I want to point your attention to a relative strength base here, because this is what suggests that this stock has been out of favor for some time and was in line with the market, overall market. And now look at how slightly it starts to go up in a little bit more accelerated manner, both in price and the relative strength. So this complex relative strength structure suggests the immense causality and continuation of the move.
Ramon, just one very quick question. I see that mid-August jump on very high volume, followed by a very narrow, shallow sideways reaction. That looks very bullish to me.
Yes, great test of that bullish bar. Absolutely.
And it's also coming with improving relative strength.
Okay, we have maybe about five more minutes. Let's go to maybe something else, Bruce. Let's go to
how about materials?
Materials. Okay, let's do that.
Just have a look and see if that appeals to you.
Okay, so tell me, which group would you look at?
Let's look at the let's look at the steels.
Still, okay.
Bottom.
Okay. And
Steels have been, out of favor for ever and ever.
so
And
let me know where would you like to go?
well, let's look at this Arcelor MT.
Okay.
So Roman, I'll let you lead with that.
Well, really good uprising market right here. I like the acceleration right here, both in price and relative. So it just shows that they want to be there. They want to be in this stock. We see this confirmation also by the increase in the volume signature, slight increase. I like this spot right here too. So that just tells me that supply is increasing, but it's being followed by an increase of the demand. And what does the price do after that? In the point of the vulnerability with a lot of supply, the price actually continues to go up. And most recent kind of consolidation, slight move up, maybe a sign of strength right here. So Bruce, would you be expecting a continuation almost instantly, or would you be saying that, we're still kind of in a trading range?
Oh, I guess this could continue on for a period, but I would be on the alert for a pivot up and out of here. And continuation, especially being that it's just persistently throughout all of 2021. Look at how well it's performing. The relative strength of leadership. I mean, and this is a group that just has been unloved forever. So.
Okay, let's look at something else here. Bruce, what else?
How about Nucor and UE or steel? Yeah, either. Yeah.
Okay, Bruce.
So here you can see upward trend acceleration from February onward. Look at how well this group is acting, or this stock is acting relative to other parts of the market. And so this is, and also, you see how far these have come. This stock still only has a PE of 11.5. And so despite the fact, look at the scooter rating, 98.7. It just doesn't get any better than that. So this stock is really leadership. And so it's jumped up and out. It's done it on really high volume. It's pulling back on diminishing volume. I may do a little bit more of that, but if it starts to pull away after a successful backup here where it's really not giving up much ground at all after jumping out, and it's just pulled back to overhead resistance, which is now support, this could be the continuation of an important uptrend.
All right. Okay, so we have maybe like a couple of minutes left, Bruce. Let's do one more. This is intriguing a little bit. Aluminum. So let's just. Ooh, so nice. Okay, mid cap. Still, yeah. Let's not go into something that illiquid. Okay. This one is going to be the same. Okay, Alcoa. Okay, well, most definitely. So what do we see here? Well, first of all, the prior uptrend is just amazing since the COVID low. By the way, this stock has been on the Wyckoff communal watch list, I believe, for quite some time. And look at the latest reaccumulation pattern where the change of behavior is not that substantial, is not that threatening. All of the reactions, are somewhat healthy bullish reactions, which we should be seeing. The relative strength of reaccumulation also coincides with the price reaccumulation. So what you see on the price, you see on the relative strength as well. This type of, buying in terms of the buying waves, which is being confirmed by the volume signature, and also the relative strength, is suggestive that this is still going to be retaining the leadership for quite some time. We don't see a downward trend in relative strength. We're seeing more of the small base, and now the relative strength is trying to get out together with the price. So, Bruce, I think that this is a potentiality for not just continuation, but also continuation of the potential leadership.
I would just point out that if you look at October 2020 back to June, so the third quarter, you can see that's a reaccumulation. And once that resolved itself, started to go up, it had a very sharp move of about a month. And so here you have a structure that's about the same size and looks great, actually looks better than the reaccumulation prior. And so it very well could lead to another advance similar to that.
All right. Well, guys, hopefully this is useful and valuable, and we wanted to show our guests, not only how to do this, but what we do regularly in these classes. So again, the class is always about two primary things: the discussion of the markets, and then the discussion of the specific stocks through our either top-down approach, or through the scooter search, or through the communal Wyckoff watch list, or through the segments like scanning that Johnny Scan brings to us. We also have the anatomy of the trade segment, which is also very, very interesting segment where we are trading specific instruments together as a group. So these two instruments for current trading is the silver miners and Tesla. So silver miners are looking like this. Bruce, this was the bar where we've entered the position thinking that we are in the potential phase C. We probably had a sprint, and I like the recovery here, Bruce. Would you be still keeping this position?
Yes, because of the sharp change of character after the spring of that support area, and the fact that you've had two really good demand bars that have followed that decline in there. So I would really want to see if this can continue. And the reactions that come subsequently are shallow, narrow, and brief.
Okay, and then Tesla. So we've had a point of entry on this breakout bar, and it's kind of an interesting, Wyckoff puzzle here in terms of the labeling, in terms of would we be getting out of the consolidation. So I think during the next session next week, let's spend some time thinking through of what we're seeing here on this chart in Wyckoff terms. But after the point of the entry, we had this reaction, which actually held, and our stop loss was not triggered. We had another higher high, and this whole formation here is higher highs, higher lows, so we are currently in a smaller uptrend. I'm a little bit concerned about the quality of the reactions, just because they are so aggressive, but so far so good, and I still would be keeping it, would be probably thinking of not adding necessarily here, but somewhere during a reactionary mode. Bruce?
I think what would be very constructive would be to see maybe a little bit more strength right here, but then a shallow, narrow reaction back to old resistance, and that might be the opportunity to look at adding.
I also would be thinking and kind of discussing in my head a second scenario where we could go up to the previous high and then come back to some kind of true phase C. I wonder if that could be the case, just basically judging the character of this rally right here.
Interesting.
Okay. All right, guys. Well, with this is it for today. For those of you who are our current students, thank you for being here. Thank you, as usual, for submitting your charts. We have received a couple of student submissions that we will look in the next class for sure. For those of you who are guests, please consider joining us. We will be excited to have you on board. And this is a really good time to do that, because for this week only, we have a 20% off promotion, and it's $79 as a monthly fee. If you have any questions, as I mentioned, please email us at wyckoffassociates@gmail.com. If you have any administrative questions, please address those to Nancy. If you have any content-related questions, please address those to me or Bruce. Bruce, really great session, good content. I really enjoyed all of our discussions. I'm looking forward to the next week.
Wonderful. It was a great time, and thank you all. Have a great week. We'll see you next time.
Sounds great. Thank you, and bye-bye to all.